So Algo dropped by more than 27%, and you can also see that we've tapped outside of the Z wave target, sitting between 16.09 cents to 16.93 cents. And so it's possible that the WXYXZ structure that I've been tracking is invalid, and instead we could have a deeper corrective move to the downside where we could even breach past this level at 14.6 cents. And so if I zoom in, and in fact if I remove this also, what you can see is within this recent move to the downside, it looks to be made up of a corrective move, where what we had was a WXY structure that formed, where this was the W wave, made up of this corrective move that attract, and we had a next wave that fell short of this target that I set out previously. And you can see that we got rejected at the 50 EMA, which was bearish, which then led to this move to the downside, where that Y wave potentially formed. And so what I'll do very quickly is check to see if that Y wave met the typical requirements. And here you can see that the Y wave ended up reaching 15.18 cents, which taps into this region here. And so, yeah, it looks like the corrective move to the downside is complete. And that then led to this pump to the upside, where we actually breached past the 50 EMA. And we tried to retest the 200 EMA, but failed to do so. Hence why we saw this move to the downside, because us failing to test the 200 EMA was a bearish signal. And so what I'll do is I'll break down this recent move to the upside and see what's actually taking place. And so if I go on a 5-minute chart, and it's possible that this is actually a 5-wave move, and so what I'll do is I'll go on a 15-minute chart and use the fib tool. So if I bring this to the right position, and the 1.618 retracement level sits at 16.25 cents, and we ended up reaching 16.23 cents, and so we actually failed to retrace towards that 1.618 retracement level. And so it's possible that we had a WXY structure that played out instead, as opposed to a 5-wave move, where the Y wave ended up extending beyond the typical requirements, which is anywhere between 1 to 1.226. And so we had a WXY structure that formed, and then we had this corrective move to the downside that was also made up of a WXY structure, as you can see. And in fact, if I quickly check to see if that Y wave met the typical requirements also. And yeah, we ended up tapping into that region between that 1 to 1.226. In fact, we just about extended beyond the 1.226 retracement level. And so it looks like this corrective move is complete. And then we had this pump to the upside, where it looks like we had a WXY structure, with this being a W wave made up of a WXY structure, this being an X wave, and this being a Y wave. And so what I do is check to see if this Y wave met the typical requirements. And yeah, here you can see that we actually just about extended beyond the 1.226 retracement level, but we failed to reach the 1.618 retracement level. And so it's possible that this corrective move to the upside is now complete, made up of a WXY structure, with this being a W wave, this being a Y wave, the X wave, and this being a Y wave. And if I remove the fib tools, and it looks like this Y wave actually fell short of the typical requirements. And so what I do is check that very quickly. So yeah, ideally we wanted the Y wave to reach anywhere between 16.96 cents to 17.22 cents, and that kind of falls in line with where the 200 EMA was, but we got rejected. However, the minimum requirement, which is a 61.8% retracement of the W wave, was met, and so this wave structure is still valid. And so, given that we had this move to the upside, it looks like Algo is now in a retracement to the downside, where we could see a 50 to 88.2% retracement of this wave structure. And so if I bring the fib tool once again, and here you can actually see that we have reached the 50% retracement level, but we could go even deeper towards 15.35 cents. And so if I draw that target in, and so what I am looking at for is a bigger WXY structure to the upside, where this would then be made up of a W wave, we'll have an X wave that would then tap into this region, followed by a Y wave to the upside, where we could actually even breach past the 200 DMA. Now, of course, the bearish signal would be for us to breach outside of this region and go even deeper than the local low. And should that be the case, then that would then mean that this move to the upside is complete, and then we get to see that deeper move to the downside. But of course, we need to see if whether or not we find support within this region and then see that pump to the upside where we then breach past the 200 DMA. And on an hourly chart, what you can see is the bears do have the momentum, and that's reflected on the price chart, given that we have seen 3 consecutive red candlesticks. So if I go in the 4-hour chart, what you can see is we are within the overbought conditions. And so it looks like the bears are now actually regaining control of the market. And that's part of the reason as to why we have seen a downward trend as things stand at the moment. And so, yeah, next key target is this range. And if we fail to reach this range or find support within this range, then that would be a bearish signal. And we could then potentially see low lows. And should that be the case, then the next target will be this region between 10 cents to 12 cents, which is something I talked about previously. And so, yeah, that's just my quick update on Algo, and hopefully you found it useful. And if you did, then feel free to hit that like button. And if you're new, feel free to subscribe. Take it easy, people. Peace.